I should ask you.
Okay, there you go. You're good.
Okay. Hello, everyone. My name is Patrina Pelton Smith. I am the CEO of the Business of Charity. We are located here in Houston, Texas, but as you can see, we work in many places. In fact, I am very fortunate to have had clients from Hawaii to Maryland. And so I appreciate the opportunity to present today. So if you have any questions, feel free to drop those in the chat. We'll monitor those with the help of my lovely assistant, and we will go through this presentation. So the presentation today is nonprofit, part of my nonprofit bootcamp curriculum. This is one of 9 sessions. We're going to focus on starting at the beginning, where we're talking about compliance, as well as structuring your organization correctly. And all of this is focused around grant writing because the Business of Charity is a consultancy focused on grant writing, formation, and capacity building. And so as we go through, and there we go. I'm going to say technology. Now, I tested this out before we got started, and everything looked fine. So here we find ourselves where we see that there are some glitches. So pardon that, but as we go through today, this is how the session will flow. We're going to talk about the formation lens, the bylaws and your board, mission and vision, the narrative and the logic model, compliance and action. And then if you have any questions, you'll have my contact information for you to be able to reach out to me. So the key points for this session, we're going to cover what does incorporation look like for you. Now, obviously, it's going to be different according to your state. But for the most part, we have filed in multiple states, probably about 15 to 20 states. And so with that being said, what I found that it's very common across the board when you're doing your filing and what the expectations are. So we're going to talk about also what you need to have for the IRS, what they are looking for, what your board should have in terms of mission, vision, and your program narrative, then your logic model. And a lot of organizations are not familiar with logic models, particularly those that are grassroots and started from basically a point of service. That's often true of my clients. About 85% or more start with a grassroots approach, meaning they saw a need and they just wanted to fix it. And so they go out and start serving, doing the work, and then they come back and put their infrastructure in place. And so that's not uncommon, but for you to really scale and grow, you have to come back and do the hard work. And so key points for this is that you're going to have confidence in your scaling. You're going to understand that these documents that we're going to talk about are not just paperwork. You have to have these if you're expected any type of funding, particularly true corporate or foundation funding. The easier it becomes easier once you have all of this in place. And when you do this, the earlier you do it, the better, because I have worked with organizations from implementation stage, 0, all the way out to organizations who have been in existence sometimes 20 plus years. And what they are often missing when they come to me is that foundation and that capacity for them to actually grow. So we want to make sure that we get this done the sooner, the better, so that you can actually have some funding in this. So let's talk about formation. So formation obviously is your launch pad. And you want to make sure that you have an entity that matches who you are as an organization. That is key because there are 27 different tax exemptions under the IRS. And that means that with those 27 tax exemptions, you're going to make sure that you have the correct one for the entity and what your services will do in the future, not only today, but then. So it's important for you to understand that if you are a common 501c3, and that's what most organizations are, that you recognize your limitations with that. For instance, while you can go out and obtain grants for the organization, your advocacy, if you're doing any type of advocacy work must be less than 10% of what the work you're doing, 10% or less. Otherwise, they being the IRS, will ding you for being an advocacy organization versus a 501c3 charitable organization. So you want to make sure that those pieces are in play. And so with that being the case, you sit down with a consultant such as myself, and or an attorney, and make sure that you go over those options before you pick an entity. And I will also offer, sometimes my clients come to me and they say, hey, I want to create a LLC. And I say, okay, that's great. What's going to be the purpose of it? And then when I start listening, I hear that really this is a nonprofit entity. Same thing for my nonprofits. I've had nonprofits leaders, founders who come to me and said, hey, this is what I want to do. And really what they should be doing is an LLC or a corporation. So it's important that you understand and sit down with someone at the very beginning so that you will have all of your ducks in a row. And you also don't have to worry about later creating entities because the one that was initially created is not appropriate. I just had that happen 2 weeks ago, and working with that organization to make some decisions around where they're going next. So one of the things you want to talk about, of course, is your board composition, because before you can form at the state level, you have to identify your board members. Every state is different. There's only one state that comes to mind right now that will allow only one person to sit on the board, and that is the state of Nevada. Anybody from Nevada, you can tell me why later. But one of the key things with them is that they will allow one person to serve in 3 roles, and 3 roles are common for the majority of the states. They expect that you will have a president, a treasurer, and a secretary. I'm in Texas, as I mentioned. Texas will allow 2 people to serve in those 3 roles as long as there's no conflict between the roles. So what does that mean for Texas? The secretary and the president cannot be the same person, i.e. the person who makes the decisions and leads should not also be the person who records the decisions, i.e. the secretary. So that means that the president and the treasurer can be the same person, and the secretary be a separate person. So you have 2 people serving in the 3 required roles. Best practices, and I'm always going to give you best practices because the idea around this is that you want funding, right? So best practices and what funders are looking for: 3 separate individuals who are providing and serving in those particular roles. And then you want to understand the governance of the organization. So do you have a leadership in place? I.e., are you a board and you have an executive director or a CEO who's serving, excuse me, in the role that's leading the strategic plan of the organization? If you do not have that and you have a working board instead, that working board needs to understand clearly what their roles are, what are the requirements of their roles, and then how they're going to lead without pay. Because remember, this is a nonprofit entity. And so nonprofits do not pay their board for the work that they do. Now, that doesn't mean board members can't get paid if they, in fact, provide some type of work that's related to their position. So I didn't do a deep dive into board composition right now. We will talk about that. But the key part about this is making sure that the person who comes to your board, such as if you have an attorney on your board, these are usually the common ones: the attorneys, the marketing person, the HR person, potentially someone who's an investor. All of those are all, sometimes even a grant writer, i.e. me. All of those positions can serve on the board, and they can actually get paid for work that the board approves, i.e. let's say the attorney is the one who also does your formation work. And he could potentially do that pro bono or at no cost. But the reality of it is that economy is tight right now. So many of your professionals are still seeking to be paid, even when they're serving on the board. As long as the contract is fair and reviewed by the board without that person voting on their own contract, then it is feasible for them to provide legal services or grant writing or marketing or HR oversight with being paid for that specifically and still serve on the board. It's a fine line. So you want to make sure that you do that. But governance with intent. So you want to make sure your board also understands the conflict of interest policies, the loyalty policies, as well as their duty to the organization. And we will talk more about that this week. So if you join me for the sessions, all the sessions, we will cover that as well. If not, feel free to reach out and we can have a discussion around that. So you want to make sure as the founder, and I will also put this into play because founders oftentimes think when they're launching an entity that entity is theirs. And nonprofit formation is the one time when you launch or have basically the analogy I always like to use is you have a baby. You create this child and then you hand it over to a board of individuals to basically raise it and grow it. Because a nonprofit founder does not own a nonprofit. Once it is formed, once it has its exemption, it becomes its own entity. It's a public venture. And because of that, they cannot say that they own it. They can say they lead it. But they need to be clear about what does it look like for them in terms of leadership and in terms of vision, because you want to make sure that that is succinct and clear for funders, because they are going to review and look at your documentation to make sure that you are acting in the best interest of the entity, and then making sure that you also have everything clear when you are leading an organization. So more to come if you have questions around boards and board governance. So we'll move into the bylaws, because the bylaws are a clear document that basically defines your decisions in writing. So if the bylaws basically state that you can do it, then that is something that you can do without any issue. You want to make sure, though, it's in your bylaws. Now, I'm going to be I love technology, so I'm going to go ahead and start with that. But at the same time, technology is not always a friend when you are doing or creating entities. So many people will go out and use internet search engines to obtain documents for their organization. And then they use that document without understanding that it may not be clearly defined for their organization or for their entity, their type of entity. So you want to make sure that when you are using documents that you obtain from the internet, that they have at least these 6 clauses, and then we'll talk about others if you're also an association like the NBA. So one of the first things that should be included in all bylaws is a purpose clause. That clause should be clearly defined. There is model language that you can Google. If you will Google model IRS language for purpose clause, it should come up. And it includes that you must have the educational, scientific, charitable, and religious statement in there. How do I know this? Because I got dinged for this a couple of years ago, actually a few years ago, when I was preparing documents for organizations and submitting them to the IRS. And came back to us and said, hey, your purpose clause does not include scientific and education. Well, no, it didn't, because that was not the type of entity that was being created and requesting exemption. But because the IRS expects that language to be in there, it is the one time where I say that language should be Googled and or included in your documents, so that the IRS will not come back and say that you're not tax exempt for any reason. So the dissolution clause is also clearly defined in your document so that they understand what happens if you dissolve. Now, I know for my founders, they don't ever want to think about, I'm going to shut this organization down, but it happens on a regular basis. I had a call this morning from someone with an LLC that I created a couple of years ago for her. And she said, you know what I expected to come to fruition never did. I want to go ahead and close this out for my taxes so that I don't have to worry about the IRS. And so, same thing with a nonprofit entity. You want to make sure that your dissolution clause is clear. You also want to make sure, and this goes back to what we just talked about with founders, that that particular statement indicates that anytime the organization closes down, any assets of that organization can only be given to another nonprofit entity, does not return to the founder. It does not return to anyone attached to the founder. And I've had families who created organizations and they're like, well, but we created it with this intent. If you had created it as a charity, it is now a public venue. It can only serve the public, and the assets attached to that can only be given to the public, to another entity that's serving the public. So I say that's because I can think of a couple of my founders right off the top of my head who gave property to the nonprofit, and that property is attached to, or not attached to, but aligned to or adjacent to their personal property. And so because of that, I always say make sure that anything you give the charity, you're willing to give up. It cannot be something that you think will come back to you. So the next thing is your fiscal year. You want to make sure your fiscal year is in alignment with what the organization wants, as well as the expectations of the IRS. And so if you're using a traditional fiscal year, which is a calendar year, January 1 to December 31st, then you're, fine. The expectation with that, and we'll talk about this when we talk about the 990, is that your tax return will be given 5 months after the close of your fiscal year by the 15th day. For a traditional calendar year, that means May 15th, your 990 is due. That's what the IRS is looking for. If you do not turn it in within that time period, and you do so for 3 consecutive years, your revocation is automatic. There is nothing you can do to save that. So you have to have those documents done consistently. That's why it's important to identify your fiscal year, know who is going to be reporting for you around your fiscal year. And if you have an off year, understand what that means for you. So off years or alternative years, for instance, federal fiscal years, October 1 to September 30th of every year. That means that your documents would be due by the 15th day of 5 months after that. And so, whatever your year is, you want to make sure you have that aligned. I have a couple of clients who have a July 1 to June 30th fiscal year. Their documents are going to be due in November of this year. And there are many reasons why people do that. And, we won't do a deep dive into that. But if you are looking at your fiscal year, keep your reporting in mind. That's what the key is for that. Your size of your board is also very important. So you should identify that within your document, because you want to make sure it's clear to a funder and the IRS how many board members you will maintain if you have less than what your bylaws state. Now, remember, the states may say that you only need 1 to 3 board roles, not even necessarily people, but board roles. And if your organizational document, your bylaws state that you need to have 5, then your bylaws are going to be what everyone looks to make that determination whether you are in alignment with that or outside of that. So that's a key thing for you. Personal liability clause. This is something that the IRS has gone to basically pinpoint in the last 18 months. Same thing, creating a document. They asked for a certificate of formation, also known as articles of incorporation. And when they did that, that clause then became, it was not included in the formation document. They wanted it there. And so that particular organization had to be amended to include the clause for the personal liability. Now, what does that mean for you? So what many individuals do not recognize when they are often serving on boards, your decisions, again, drive an organization. And so because of that, you want to make sure that you have no liability. I mean, so corporation, so by the point of it being a corporation, you're not supposed to have liability for decisions. But if you don't have that language in there, or it's not clear, that was the purpose of the organization, and that the organization is not going to allow you to be out there without coverage, then you will want to make sure you have that personal liability statement in place. They are requiring it. So if your organization does not have that in place, then you definitely want to come back and take a look at that. And then you want to make sure you also have an indemnity clause. What's indemnity? So for those of you all who are outside the space, this may be in your mind an insurance clause. Obviously, it has a lot to do with insurance, but in the big scope of thing, what that means is that the organization, no matter how big or how small, is going to cover its board of directors, its leadership, its employees. So the best and easiest way to do that is to purchase insurance, because that way you don't have to worry about how much money is in the bank. If you're an entity that is large enough and can take on that responsibility without having to have insurance, then an indemnity clause still stands, whether you're insured or not. The type of insurance that we're talking about here is directors and officers insurance for those who may not have had that experience. So other things to think about in addition to these IRS requirements, if you are as an association, so you have very much like the Maryland Blockchain Association, have created an entity that will have member-based classes, then you want to make sure that you have those classes outlined and their voting rights. So for instance, maybe a full member has all voting rights and authority. But let's say a student member only has the ability to attend meetings but not vote. So you want to make sure that your lines are clear. Same thing for your committees, the conflict of interest and boundaries for how you're going to advocate and also represent the organization. Because remember, members are just ambassadors for your organization. And so there should be some guidelines around how to best represent and advocate for the entity. So as we move into the next stage, we're going to talk about the mission and the vision. So mission and vision should have for the organization, it should identify who you are, what you do, and how you do those things. So I came out of a domestic violence organization. I led that for several years. And one of the things that we talked about was that we were ending domestic violence by providing shelter, counseling, case management, and preventive work. And so we talked about that's our mission. Our vision was that we would do this work until domestic violence no longer existed. So the mission should be clearly represented in no more than 1 to 3 sentences. Matter of fact, if you're forming an organization and requesting a tax exemption using the IRS 1023EZ form, that form will only give you 250 characters. So you've got to make this work in a very short space. And so that's one of the reasons why I recommend that no more than 1 to 3 sentences on what your mission and your purpose are, simply because you may not be able to fully express it if it's longer than that. But the other thing and the piece of this is that when I read your mission statement, or when a funder reads your mission statement, you want to make sure that it's easily clear for them to understand and say, I know exactly what that entity is doing, and we can fund this or we cannot. And so that's the reason why your mission should clearly identify who you are, what you're doing, and what you anticipate at the end of that mission. Now, your vision is also going to speak to that as well. It is the long range envisionment of what you do, what happens when your mission works. So domestic violence, we are ending it. We are going to do this work until it ends. Now, with that type of vision statement, clearly you understand that there may not ever be an end to domestic violence. And so that is going to be the other piece of this, is making sure that you are clear and concise about what it is that you do. I'm also going to move this out of the way just in case that it's blocking any of the text. And so one of the illustrations that I gave for purpose, or this part of the presentation is mission. The Maryland Blockchain Association is an association of organizations and public leaders accelerating trusted adoption, informed policy, and market-ready talent for the blockchain ecosystem. Now, that's not their true mission and vision. Let me put that out there, disclaimer out there, but it is a good representation of what a mission statement should look like. Same thing for your vision statement. The Maryland Blockchain Association is an internationally recognized hub where blockchain innovation grows with regulatory clarity, public trust, and broad-based opportunity. So it talks about what happens when the mission is applied and has been reached. So mission and vision both should be very short. I will tell you that I have seen less funders request the vision statement, but I still believe that the vision is still part of your foundational structure because you should understand what it is that you're trying to achieve, even if your funder is not necessarily trying to ask you that question. And so now we move into the organization or the narrative section of the presentation. So the narrative is what makes the organization relatable. You should be able to clearly and concisely state what happens, who you are, who you serve, and why the work matters. So when you're creating a narrative, and for those of you who will receive the slides afterwards, you will also receive a sample narrative layout that I use with my clients because the narrative is a one-page document that basically offers a coherent list of your activities and services. It also helps your sponsors, your members, your clients, your stakeholders see exactly where they belong in your program. So it talks about the structure. It should identify the type of entity that you are. We just talked about there being 27 different types of entities out there that are tax exempt. So you want to make sure that when you're offering that and talking about that, they're clear about who you are and what you are, because there are other common entities or C4s, which are advocacy organizations, and then C6s, which are very similar to being Chamber of Commerce's. A lot of them are C6, and that's why you sometimes hear them say, we also have a C3 arm, because C4s and C6s and many of the other entities that are out there cannot receive grant funding and or donations. Or let me be clear, taxable donations, because for instance, a C6 can in fact receive a taxable donation, but the donation usually is for a business purpose. So that means that if you're not a business entity that's donating to that C6, then chances are you're not going to be able to take it on your taxes. Whereas a business owner, for instance, the business of charity, can give to another business, and then I can deduct that in my taxes as potentially marketing or education, depending on what the purpose of it was. And so with that being the case, if you do not make that clear to your funder, they may say, we're not sure if we can give you money or not. Mission and vision. We just talked about what are your purpose and your goals. So you want to make sure that it's clear from the top. And I didn't say this during the mission, but I often remind my clients, remember when there used to be, you would write a mission statement and it was a very lofty, long paragraph of what you were doing. And oftentimes what would happen is that we would read it, the general layperson would read it and we go, what are they saying? So that's why it's important that, again, mission and vision are very concise and clear and on your program narrative so that they can immediately see, I can do this or I cannot do this. And then the activities, what do you do? So one of the examples you're going to see on my narrative statement is for a organization here in Houston. We wrote this about 8 years ago, and their idea was they're going to do community development work here in Houston. Their activities are transportation, housing, and also doing some work where they are information referral. And so with that being the case, it was very clear as part of the community development work. And when we said housing and shelter, they were going to do blight. They were going to clean up blight in a southeast neighborhood here in Houston. And so with that being the case, it's very clear when you read the narrative that that's exactly what they're doing. And so you want to make sure when you are laying out your activities, that each one of them have a statement that indicates how you will complete that activity and for whom. And we'll talk more about that as well this week. So now we're going to shift into the logic model. Now, many people have not heard of the logic model itself. And so the whole purpose of the logic model became a process around 2006. And this was where I was working for my domestic violence nonprofit organization, but I was a legal advocate at that time. And when I was working for them, and my executive director came to me and she said, "Hey, I need to send you to logic model training." And I said, "Okay." And so I went to the very first training, and this was something that was basically created in the United Way ecosystem. United Way ecosystem. They are amazing partners. If you have the ability to partner with your local organization, I definitely recommend it. Here in Houston, there are so many nonprofits that for literally about 20, 25 years, they did not offer any competitive grants because they had so many partners that they had worked with for many years that they shut down their competitive grant process and then only offered it to those who were already in the ecosystem. And so about 2020, they opened that back up into a 3-year competitive process around navigation services, and that is the information and referral process. So back to the logic model to give you just a little bit of history around, why they came to be. So when my executive director said, "Hey, I'm sending you to this training," I went to the training and I sat there and I was like, "I hate this. I don't want to do it because why are you questioning what I do in terms of activities and outputs and now telling me I have to create outcomes?" Well, here's the reason and the rationale for it. So you want to be able to say, "I am helping." So that's your theory. I'm helping individuals for whatever reason. Blockchain, many of you are blockchain organizations. And so with that being said, you're going to tie that into what is related to your organization. So what is the theory of change that you're attempting to make? Is it to elevate blockchain? Is it to raise awareness, or is it to raise money? Whichever it is, you want to make sure that your theory is clear, and then based upon that, decide what are going to be the things you need to do to make that come to fruition. So those are your inputs. And so that could be many different things here. I listed board members, expertise, sponsors, and organizational relationships. Those are just a few of the things that could be your inputs, because it could also be staff, it could be volunteers, it could be money. And so you want to make sure that you have a layout of a logic model that clearly outlines from your theory of change what it is that you're attempting to do, and then defining the inputs, and then your activities. So what is it that you're going to do in this space? Are going to be events such as this one, education, advocacy related projects, and then ecosystem convening, all things that MBA does. Is it going to be what are going to be your outputs? So your outputs, you're going to look at, of course, the easier things are membership, attendance, what resources are development, what introductions could be made, partnerships that are being developed. And so those could be some of the partner touch points and outputs for your organization. Let's say you are a more traditional nonprofit, and so you're like, "Okay, well, what are my outputs? How many clients have you served?" And that was usually the struggle for many nonprofit entities, is that they're looking at their outputs as outcomes. They're like, "I served 2,000 people last year. What's the problem?" And I was in that same place because I was like, we're serving, what's the issue? But the issue is that funders want to now know what is the return on their investment. They want to know what is the outcome if I give you funding and a client comes in, a participant, whatever you call that particular person, a member, what happens from A to Z when they leave your entity or when they join, but they arrive at the endpoint. And so that's what outcomes will do for them. Now, there are short-term, mid-term, and long-term outcomes. And so you want to make sure that your outcomes outline that. Now, it may be very different depending on your entity. One of the things that I teach is that usually short-term, particularly for human services and social organizations, short-term is usually 0 to 6 months, and they're looking at what happens in that period of time. Midterm is usually 6 to 24 months, and what's happening in engagement, what's happening in the change in the mindset, and what could potentially be the next step or the long-term outcome for this organization or for this individual. So you want to make sure that it addresses what happens in from the 24 months and beyond. Now, if you're looking from a scientific lens, that lens could actually be much longer. That's where you have studies and models that say, hey, we've been studying this for the last 20 years. That means that they have kept in touch with their subject and or subject matter to track them so that they have a longer outcome. So for organizations that have that model, you want to make sure not only do you have that particular lens, but you also want to make sure that you have the funding that will sustain that level of contact. And so that's why it's important to understand and put into place a logic model. Now, you can have several different types of logic models. You may have a organizational logic model that covers all of your ecosystem, or you may have a program-based logic model that only covers a specific area. So for instance, domestic violence may be one area for an organization. We also, when I was running the nonprofit organization, also did sexual assault. And so for that reason, I would have a logic model for domestic violence as well as a logic model for sexual assault, because while there may be some overlap in those areas, there are also some very real differences, and you want to make sure that they are treated well for each type of client. So once you have developed your logic model, a couple of other things you want to talk about is how do you evaluate that? So you would want to make sure that you have indicators of what means you have hit your outcome and hit effectively. You also want to make sure that you have the tools and resources to collect the data and maintain the data, and we'll talk about that. And then you also want to make sure that you have a continuous quality monitoring process, that when you review the data, you see that there may be some issues and changes that need to be made, that you have a way and a process to make those changes and then implement them. And so the logic model will incorporate all of that information as you are going through it. Now, we could sit down and do logic models by itself over a 2-hour period. I've done that. So there's much more to this. But for today, that is what we are covering. If you have any questions, feel free to drop them in the chat. I want to make sure that I am mindful of our time. And so the next thing that we're going to talk about is, of course, compliance. Now, compliance is where I find that many of my clients, even ones that I have formed, and I share with them whenever I do a formation, a compliance calendar that is specific to them and their state, so that they know exactly what is required for them. And so If you do not maintain your compliance, what will happen is that you will have an organization that in your mind exists but has been revoked either at the state or federal level or both. And so let's talk about that for just a second. So state periodic status reporting is generally required annually. Now, the state of Texas actually only requires it every 4 years. Every 4 years, they will send out some type of notice to the entity that asks, are you still in existence? Should we continue to keep you in our list of organizations that are active? And if no one responds to that letter within the time period, what's going to happen? The state of Texas is going to assume that it is inactive. And as a result, they're going to revoke your status. And when someone searches for you, i.e. a funder, they're going to see that and they're going to say, well, I can't give them money because they no longer exist. And that may not be true at all. It just may mean that in 4 years, the individual who received the letter is no longer connected to your organization, did not forward that letter to you. And as a result of that, you were unable to complete your compliance and they revoked you. And now you have to come back and be reinstated at the state level. You can do that. It's usually a fairly easy process to be reinstated, but it's just the annoyance and the aggravation of having to do that drives maintaining your compliance on an annual basis. Other states do require annual reporting. And so you want to make sure that whatever is necessary for your state, that you do that. The IRS requires the annual filing of a tax return. That's how they know that you are an entity that is still in existence. And so when they receive your 990N, also known as the postcard filing, which is basically about 4 questions that you ask that states that the entity is still in existence. It has a leader in an executive director or CEO or board president, and that the addresses are correct that they have for you, as well as whether or not you receive more than or less than $50,000. Now, the trigger for them is $50,000. So as long as it's $50,000 or less, you are totally fine filing a 990N as your tax document. It's very simple. We do these on a regular basis. It takes an hour or less to do it. And so definitely make sure you maintain that. 990EZ are for organizations who have brought in more than $50,000 in revenue, but less than $200,000. And so if you have an organization that falls into those guidelines, then you're going to complete the 990EZ. Now, this actually tracks how you manage your money. And so I do occasionally recommend to my smaller entities who are not bringing in more than $50,000 that they still complete a 990EZ, because if you're going after large amounts of funding with larger corporations and private foundations, you want to make sure that you can show them you have the documentation, and the 990EZ is an easy way to do that. So you have a CPA or an accountant complete that document for you, or if that is your background, your entity has that capacity, you can complete it and then submit it to the IRS so that they have it. And for organizations who are making $200,000 and more, you have to complete the full 990. Now, in addition to it tracking your numbers, it also asks some questions around sustainability. And so these are questions that the board and the accountant or the CPA should be answering together. The other thing that I always recommend for the EZ and the full 990 is that the CPA or the accountant sit down with the board before they submit it to the IRS to make sure that the document is accurate. I can tell you, I have sat on several boards. I still sit on several boards. I have looked at 990 EZs and 990s, and I look at them and I go, this is not accurate, does not reflect who we are, what we do. And so we need to make some amendments. And so with that being the case, it's a partnership between you and that accounting firm, CPA, that make sure that they represent you to the IRS, because the IRS is going to read that document and say, either they're following their mission or they're not, and then you may be at risk for having your exemption revoked. Internally, I recommend that you create a calendar so that you know annually who and what are included in your documents. So, for instance, your board roster changes frequently. If you're like many organizations, board members may decide to resign. Or you may have a new board member join. And so that roster needs to be updated with the state that you are in and the IRS, but it's going to happen at two different times. So for your state, many states will allow you to file that annual report, and you can do so. And once you've done it, you're fine. You don't have to update it again to the next year. The state of Texas will allow you to update your report. They call it a nonprofit status report or periodic report. And they will allow you to do it at any time that you make a change. Why is that important? One client called me 2 years ago and he said, "Hey, my funder will not release my money, my check, until my board roster on the Secretary of State's website matches the board roster I gave him." And because his board had changed and the composition was totally different than what was being seen on the state level, that funder held the check. We did that. We updated his roster to reflect the current board, and then that funding was released. And so he was able to move forward. So that's why having the internal calendar is very important, because your state filings may change more quickly than the IRS. Now, the IRS, you're filing with the 990 based upon your fiscal year, will help drive that information. You can do an earlier filing and you can call them. But generally, how they expect to receive information from you is through your filings. So for your board, I recommend that you do that at least quarterly. Your state reports, depending on your state, can be either periodic, as you need to update them in Texas. In fact, I recommend that people do it at least once a year, no matter what. If you want to go in and do that filing, there is a charge for it here in the state of Texas for that report. Some states, there's not a charge, so it depends on, of course, where you are. And so depending on that, that may drive your budget around that. And then, of course, you want to also make sure you have an annual filing with the IRS, so that that way they will be able to maintain your organization and your tax exemption. And so alignment checks, you want to make sure that you maintain your structure and your authenticity by making sure, does the board reflect the mission? Those individuals who are serving with you, do they understand who and what you are, and can they speak to that? Do your program support what you state your mission and vision are for the organization? Is there value that can be seen by individuals? Because if there's no value that can be seen, they're less likely to support you. And one of the things of being a public entity is that you have to have public support. If you do not have public support, so i.e., you have individuals unrelated to the organization that are donating to you. Why is that important? Because if the IRS, when they see your 990 EZ and or your 990, the full 990, that you don't have diverse individuals donating to you, maybe it's just one entity, they will flip you into a private foundation. I've had that happen with more than a couple of clients. And in fact, we had to create a brand new entity for a client because she had been flipped to a private foundation and then had to wait 5 years for her entity to be returned back to a 501c3. She needed to obtain money very quickly that was promised to her. So we had to create a new entity aligned to her mission and vision and the current organization to ensure that she could receive that funding. So you want to make sure that everything is maintained so that the IRS will not flip the entity to a different status because they can't see it on paper. And then governance and operations, are they clearly separated? You want to make sure that everything is clearly being led by the board and then by the leadership that is underneath the board, your executive, as well as her or his team of individuals that's doing the work day to day. Now, if you are a working board, and that's very common, I sit on an organization where we are the working board, then you want to make sure that as you are doing programs and services, that too is clearly delineated between the organization and then the individuals who are leading. So common gaps, your mission is too broad. I've seen this happen. I have a client that when she first started, they were doing 6 things. And I said, what is it that you do well? That's the same question the funder is going to ask. So you want to make sure that it's clear. There's a reason why the American Cancer Society only says cancer. They don't do cancer and other diseases. And while there are many different types of cancer, their focus is just on that. And then you have organizations that will dive down and only focus on maybe one specific cancer. We see that with breast cancer. They are very effective in making sure that they stick to what it is that they are serving. And that avoids mission creep because you don't want to creep away too far from your organization. And then that way individuals are unable to determine what it is that you do. Programs that grow faster than operating, see that as well. All of a sudden you started out doing one thing and now you have added 3 or 4 other services and activities, and it's not caught up with what is on paper. So you want to make sure that you have someone who's doing that, your COO, your operations director, whoever that person is should be covering that. Compliance has to be incorporated into this. Ideally, your board and your leadership are covering this. But sometimes because of board changes, they don't have an eye on this. So your CEO should be the owner of compliance in conjunction with whoever she's working with, he or she, accounting, legal, whatever the issue is. And then, of course, leadership is not mirrored in your document. So you want to make sure, again, your bylaws, your strategic plan, your program narrative, all are in alignment for the organization. Because organizational trust is the real product. If you do not have all of these things outlined, what will happen is that they will not fund your organization and you won't have anybody to help promote your organization. Because what happens, donors, volunteers, supporters often become promoters. And so that is key for a nonprofit entity. So actions after today, review and revise your bylaws, review and tighten your program narrative, draft a logic model, and then make sure you confirm that your compliance documents are all in alignment. Last example before I do Q&A, and that is when the pandemic hit, I was working with nonprofits and for-profits to obtain PPP and EIDL EIDL funding. And so I actually worked with an organization for like a half a day. We were going through creating their documents, making sure that everything was in alignment. And I just so happened decided, hey, let me go ahead and pull down their certificate of formation because, I want to make sure that we're clear on that. I went in, I pulled down their certificate of formation only to learn that they had been revoked 2 years previously. Who was responsible for maintaining their compliance? The attorney that created the entity, and the attorney was still working with them, but had let the entity be revoked because they didn't respond to the documentation. So that's why it's important to make sure that you have all of your ducks in a row so that when opportunities come along, they will be able to be quickly responded to or you can receive funding. So are there any questions? I'm not sure how. Okay, go ahead.
We do have one question. I'm gonna type into the chat or can I just say it to you?
Yes, you can.
Okay, so one of the questions is, do you have or have you ever had clients that receive funding for a company that serves American and international citizens? If so, was it more challenging than getting funding for a local program?
That's a very good question. And so the answer to that is yes. I actually, when I'm working with organizations that have international arms where they want to serve outside the US, I warn them right now we are very much in a time and place, and we've been here now for about 10 years. About 2016 was the first time I really had this come up as an issue where someone literally said to this entity, and they were serving here in Houston as well as in the past they served in Mali and the Ivory Coast. And we had that information on our website. We submitted an application